Hello, investors and traders, and welcome to the very first Technical Tuesday educational video series. This is the first of many to come, where each and every week we'll pull out a technical analysis strategy for traders who are looking to make money in the market. And this week we're going to be talking about Bollinger Bands. Now, I have been talking about the bands over the last 2 months. We even incorporated MOBO bands, if you recall, from previous weekly market reports. We talked about the Jim Rohrbach method for trading the moving average crossover method using the 20-period moving average. And today, as we look at this chart of DIA here on July 1st, you can see that the price of DIA has gone almost vertical over the past week and a half. And right now, you could see that we are approaching this resistance level right here. So how would you trade this market up and down using Bollinger Bands? Well, let me pull that up, and we're going to go right to Bollinger Bands. Now, look what I'm doing here on the right-hand side. I have a menu of different layouts that I'm using for the Thinkorswim platform. And these are in alphabetical order. If I go to the B's, you can see that I have Bollinger Bands set at 2 standard deviations, which is the way John Bollinger created them. And I also have 3 standard deviations and as high as 4 standard deviations. Let's jump right to 3 standard deviations using DIA as the example. And you can see that over the course of the year, the stock had reached the upper band, and as a result of the stock moving to the upper band, you could see that the bands widen. And you could see, we talked about the pinch. Here's when the Bollinger Bands come together. You see what that's the pinching effect. And then what happens when or if the stock breaks out up or down of the range, the bands start to widen out. And we're seeing that. We've recently seen a pinch right here where the upper band and the lower band have come together or close together. And what do we see? The price had broken out over this resistance high. We have an increase in volume down below, and the stock ran to the upside. As a result of that, the bands widen. You can see the distance here that I'm talking about when you more or less eyeball it on your own. Now, John Bollinger created the bands to more or less trade the snapback to the moving average. So it's all about mean reversion. Now, if you're looking at the Bollinger Bands right now, and I'll zoom in here so you can see, every single time in the past when we've pivoted, and that's the key word, pivot, when we've pivoted down from the upper band, there's an extremely high probability that the price will continue lower to that moving average, which is represented here in the black line. That's what John Bollinger references as the mean. Okay, so going back and looking at what's happened in the past, you could see here it rode the upper band. Remember, this is 3 standard deviations. And then right at that point here, we see the red candle pivot. And what happened shortly thereafter? It pulled right back to the 20-period moving average and then bounced. Right? It's exactly how the trade would have been initiated, would be on the pivot lower with an exit price back to the 20-period moving average. And here's another example of that. Let me zoom in. In fact, what I'll do is I'll go and progress through the trades. Okay, so now you're looking at another area right here where you can see that it touched the upper band right there, but the very next day it pivoted on that red candle. That's when you would initiate either a short position, or for you option traders out there, you might be buying puts or selling call spreads, whatever it may be. You're taking a negative or bearish position. The closing of that position would be right at that moving average. And it doesn't look like much, but this is a pretty significant pullback in DIA. You see that? Now here's the point where it didn't get up to that upper band. Now, if we were looking at 2 standard deviations, obviously it would have gotten a touch. But notice right here on this candle, as I magnify that there for you, that's a bearish engulfing. So if you're trading Bollinger Bands, you want to pay very close attention, not just to the pivot that's forming at the upper or lower band, but the type of candle. Is it a bearish candle? Is it a more bullish candle? Is it a neutral candle? You have to know enough about technical analysis to be able to trade that. And again, if you were using 2 standard deviations, you would have gotten short or taken a long put position at that bearish red candle known as the bearish engulfing, and you would have closed it here. Now let's look at the buy side, because I know we have a lot of bulls out there, okay? Here is a point where you might have looked at the bottom band being violated, or at least touched, and the pivot didn't come right away. Now this might have been one that would have failed on you, but we'll play it out anyway, okay? So let's say you look at this bullish engulfing candle now. You see that? It's not quite a pivot, it's still a half signal, but the bullish engulfing candle is coming on the heels of the bottom band being touched. Notice how it didn't get all the way up to that 20 period moving average. However, if you had taken a long position on the bullish engulfing, you may have gotten out on the pivot right there on that candle. Let me magnify that for you so you can see. See, we had the green candle. Then what happened? We had a small bodied red candle known as a spinning top, but that is a pivot, lower high, lower low. You may have taken the position off with a very small profit. Let's go a little bit further into the Bollinger Bands here. And again, I'm looking for a buy idea. Here's one right here. See, it's right after the pinch. You see that it touched and even violated the bottom band. You take a position on the pivot or any kind of a bullish candle here, and you would have gotten out upon it touching the 20 period moving average. Now, many of you know from following me, I trade the market from the short side. Does that mean we avoid taking any long positions? No, that's not the case at all. In fact, this Thursday, I'll be putting out the weekly market report because the markets are closed on Friday for the 4th of July celebration. I will be showing you the trade, or possibly the trades, plural, of the week, where we took long positions using this method, looking for divergences, looking for buy signals, looking for bullish candles, and we did tremendously well on a number of trades. I'll have to pick the best of the best and highlight that as the trade of the week for you. But again, if you're a buyer and you're looking at the Bollinger Bands and you see a violation or a breach of the bottom band, where is the trade most likely going to take place? On the pivot. See, as I zoom in here, you can see this red candle is showing a higher low and a higher high. That's the pivot. The very next day, you had this massive bullish engulfing candle. And so the trade would have been placed on this pivot. Even though it's a red candle, you would have taken that position and you would have gotten out at the moving average right at that area. Now, down below, I want to show you how you can incorporate the oscillators. I always like looking at as much information as I possibly can, especially the CCI down here. So in other words, if you get the pivot on this green candle, like we talked about just a minute ago, and you look down below and you see a pivot forming on the CCI, that is more than enough for me to be able to take the trade. I don't need all of the planets aligning for me to take that long trade, because remember, when you're using Bollinger Bands, it's all about mean reversion or the snapback to the moving average. You're not in this for a long-term buy and hold. Let me see what I can do here to make a fortune. We're not looking to hit home runs. We're looking for high probability trades to be able to take the position and get out with a nice profit. Now, looking at today's candle, you could obviously see it's a green candle. You could also see that the volume is increasing on the way up. There is no pivot. Therefore, we're not interested, at least not yet, in taking a short position. We do see the oscillators down below starting to hinge and pivot lower, but we don't see the price action pivoting just yet. Now, as of today, the big, beautiful bill has passed through the Senate with a 1-vote margin cast by J.D. Vance, the vice president, broke the tie, and now it's off to Congress for the final adjustments and possible approval there. We don't know what's going to happen. I do believe that there is a possibility that once the bill passes, there'll be an initial knee-jerk reaction to the high side, but there's that old concept of buy the rumor, sell the news. Once the news is out, you could see some profit taking take place. Now, again, you don't want to jump the gun on a trade like this if you're using the Bollinger Bands. You have to stay disciplined and use your technical analysis skills to identify the pivot. Remember what a pivot is. A pivot to the downside is a candle or a series of candles going up, followed by the next candle showing a lower high, lower low. That's what defines the pivot. Taking a quick look at QQQ, and I'm using this as an example. Again, this is 3 standard deviations. You could see here that we have a lower high, lower low. So on the Qs, you've got the signal. Not only do you have the signal based on the pivot away from the upper band, but you have an increase in volume now on the way down. Remember what that means. I show this over and over again. Increase in volume on the way down tells us that the sellers are motivated. In addition to the Qs moving lower today, you can see down below, we have a full-fledged pivot on the stochastic, and we have now generated a sell signal on the CCI. See the blue bubble to the right? It's now dropped below 100, which is that red line. Once the blue line, which is the CCI itself, once it crosses below the red line, you've got the sell signal. So here's one, especially for the option traders looking for a snapback to the mean. It's a very short-lived trade where you got the pivot. Your closing of that short position or closing out of the long puts that you may have bought would be absolutely at that 20-period moving average. It doesn't look like much, but that would be a drop of about 12 points on QQQ, which is enough for a profit. Now, remember what I said before. This is the layout that I have on the Thinkorswim platform. If you would like a copy of this, the way I have it set up with 3 standard deviations, you could reach out to us at Stickytrades. Support at Stickytrades is the email, and we will just send you the link that will allow you to copy this layout, and then you could save it to your Thinkorswim platform. So that is the lesson for today. Bollinger Bands, how to trade them, how to look at the oscillators to confirm the signals, and how to take your profits once we snap back to the moving average. Now, here's the big announcement. Tomorrow, July 2nd, we are going live with the midweek report. So at exactly 4 p.m. Eastern time when the markets close, we are going live for 30 minutes where Nod is going to be broadcasting economic news, geopolitical news from his news feed as the news is breaking. We will be looking at the charts and the sectors that are moving based on that news that has been released. We will be live so that you'll be able to add comments, maybe even ask questions if you have some questions, and you can absolutely contribute to the broadcast itself. Now, if you can't make it live at 4 o'clock, that's okay. It will be recorded, and as soon as we end the recording, then it will be broadcast and simulcast to the social media pages. So if you go to the top of this page and click on the notification bell, you will be notified immediately when we start the broadcast, so you won't miss a thing. If you don't hit the notification bell, then you'll have to search for the recording under the live feed tab, and we're going to take it away. We had a practice run today. You're going to like the format. In fact, I think you're going to love the format. It's a new step that we're taking in the new direction to go live broadcast through social media platforms, and we look forward to having you join us during those broadcasts. So thank you so much. Hope you enjoyed this content, and we'll talk to you on the next video. So long.